Turkey, my country, and Israel will get back to where it was a couple of years ago, because Turkey and Israel has traditionally been strong friends, brothers, and partners in many areas. I believe that this will come back after this transitionary period. What I will try to do in the next 2 hours is to give you a snapshot of the global game changers in world energy. Why I will do this? Because if you try to look at Israeli energy situation, gas discoveries, export options, government regulations, and if you do it in isolation from what's happening around the world, as well as in this region, I think you might miss the point. Therefore, I will try to highlight a couple of key game changers in world energy and regional dynamics around Israel that will help us better understand what are the challenges and opportunities that we should bear in mind here in Israel. And I think one of the key issues is also we have to consider is the trends in investment. Between now and 2035, we need around $48 trillion of investment in energy and related infrastructure. Where will this money come from? We'll look at this as well, because this is a key question for Israel at the same time, because if you are going to invest $4.5 billion alone for E&P in Leviathan, excluding the necessary infrastructure, I think that's a fair question. How Israel will be funding this massive requirement for energy projects. And last but not least, I will also try to convey a couple of key messages that we should take away from this conference. If I can get to the next one. Yes, I think I'd like to start with game changers and power shift. These are the two cliches or mantras that we hear quite often. Also, even in Israel, whenever we start discussing East-Med gas in the international conferences, we say, well, the discoveries of Leviathan, Tamar, and two new fields are a huge game changer. Yes, they are game changer, but I think we have to put things in the right context. Because still, with all these discoveries, Israel is not alone the top 40 globally in oil and gas. The prospects are there, future is there, but I think it's important to treat these issues with a sense of humility and moderation somehow, in order to avoid frustrations and high expectations not being fulfilled. Yes, there is a game change in the on the world scene in energy. One of the key game changers is supply and demand map. Before, we always talk about Bokek controlling the world's oil supply. Now I think they are less than 40%. And then OECD world, represented by International Energy Agency, where I spent almost 10 years of my career. And this was the exclusive grouping of consumer nations. And no longer OECD world is where the world's demand is coming. So demand is driven largely by Asia-Pacific countries, led by China and India especially. I'll show you this one. By 2030, Chinese import of crude oil will be around 13 million barrels per day, in addition to what they produce. So this is much more than what Saudi Arabia is producing today, on its own, the largest producer, perhaps after the US now. And today, per 1,000 people, there are 20 owners of cars. This is going to increase 7 times to 140. Again by 2030. Imagine the kind of crude demand that this is going to require. That's only in Beijing, 1,900 cars joining the traffic every day. add to these other cities, add to this India, Indonesia, and other emerging nations, which are consuming increasingly more and more as a result of a growing middle-class population. So on the supply side as well, I always say that we, from our school textbooks, we remember seven sisters: ExxonMobil, Shell, BP, Chevron, and others. Today, we have a different set of companies dominating the world, which I would call perhaps seven brothers. These are Gazprom, CNPC, PetroChina, Petrobras, and Petronas of Malaysia, KNG of Kazakhstan, SOCAR. So these are resource-rich countries, NOCs, and they control more than 90% of the reserves in the world, with varying degrees in oil and gas. But they are the main actors and controlling the supply side. And so, as I mentioned, the US has changed the game, yes. Especially North American unconventionals have become a game changer in global energy. And right now, they replace Russia as the largest natural gas reserves, and quite soon they will also replace Saudi Arabia as #1 producer of crude oil. Then add to that Canada, Mexico, Pemex is reforming, reorganizing, and Australia, which will be replacing Qatar as the world's largest LNG exporter. That's something that also Israel has to bear in mind. Angola is coming along, Tanzania, and Turkmenistan, the fourth largest reserve holder of the world, still not have access to high-value markets. What about elephant in the room? Iran. They have the world's second largest gas reserves, which needs to be unlocked. The potential needs to be unlocked. And they just recently signed a deal with Turkey as well to bring Turkmen gas up to this Iranian gas and enter Turkey. Right now, Iranian gas is the most expensive in Turkish gas portfolio, but this is going to change. And so this is to say that there are so many other regions and countries producing huge amount of gas that might cause flooding of the gas markets, that might lead to reduced prices. So this is something that we have to bear in mind and factor in our calculations. And then we see, over the past year especially, sort of a demand destruction, especially in countries like China, which has been the main driver of energy growth. Almost 50% of incremental growth we thought will be coming from China. Whether there is going to be some slowdown in that. In relation to that, then the investment levels will also be declining. So one is leading to another. And we also thought that the relatively inexpensive US shale gas, if the export licenses are secured from the Congress, they might be also flooding the markets. Because right now, I think in the US, it's below $4 per MMBtu, the price. Where in Japan, I think they are paying about $14, $15, and $12 in Europe, and 3 times more Europe is paid than the US. This is affecting the global competitiveness of US industries. But I don't believe that the US shale gas exports will reach Europe, because net payments are not as attractive as the Asia-Pacific market. And then, what about the renewables? We had a hype about the renewables. And solar energy, wind energy, geothermal, and all others. And I don't think that we will be able to see in the foreseeable future renewables somehow substituting our fossil fuel-based future. Still, 2/3 of the energy will come from the fossil fuels in the foreseeable future, even if we double the proportion of renewables in our energy mix. Happy to discuss if you have any challenges on this matter. But we see technologies are developing at a light speed. Nobody thought that shale gas, although technology was there, would be able to create such a breakthrough in world energy markets. I used to work for BG Group. We bought the Charles Lake terminal in order to export LNG to the US markets. Now this terminal will be converted to sell LNG to the rest of the world. It's happened in less than a decade period. So what dynamics and what new technologies will come to change the game, I think we have to watch this very carefully. I don't think Israel has a problem with that. As one of the innovators and creators of technology, will be on the competitive edge. Then, I'm not going to talk anything about climate change. We know all how important it is, but unfortunately, it has been shelved aside because it's long-term. People don't think beyond their short-term horizons. Climate change will remain a very significant challenge for all of us, but it's not yet factored in business decisions. So I'm not going to talk much about the geopolitical alignments and tensions, but in this region, it's difficult to resist the temptation to talk about them. What's funny is that in the past, whenever there was any eruption of a new geopolitical clash or tension, oil prices went up. What's happening now? I mean, we see ISIL in Iraq, Syria, deep-seated problems in Libya, in Venezuela, Russia, Ukraine, annexation of Crimea, direct threat to Central Asia from Russia, but still the oil prices is not going up. To the contrary, it's coming down. There are different reasons for Saudi Arabia maintaining its market share rather than the price. US shale gas, excess capacity everywhere. There are many reasons for that, but still, geopolitical tensions are not driving the policy prices up as it used to do in the past. And if the rapprochement between Washington and Tehran takes place, as all the reports indicate might happen this year, perhaps on 24th November or shortly after, this will be a real game changer in terms of crude oil production, in terms of natural gas. And I don't think that there is going to be a rush of IOCs going to Iran because of their past bitter experience, but the potential is there. If they are smart enough, they can capture them. So there will be competition for investment coming. Therefore, I think one message, without leaving it to the end, is Israeli government has to be smart as well, offering attractive terms, friendly approach, more relaxed regulatory regimes to its investors. You have to look after your investors well. Otherwise, they have no other attachment. But they will go where there are better opportunities and better terms over in Africa, Latin America, Central Asia, wherever it might be. Also, I think in this industry, as we all know, we need long lead times. It's not an industry you put your money and like private equities do, in 3 years you exit and make your profit. No, you have to invest and commit yourself for long periods. And for the demand that will come in 2025, we are investing now, as Noble is successfully doing, as others are doing as well. I think another example I'd like to give is the Southern Gas Corridor, Shah Deniz 2. Because this is an investment story which lingered too long. First, we talked about Nabucco, more than 10 years, nothing happened, and then Azerbaijan, Turkey, and BP came together, main players, aligned stakeholders, and they made it possible. $45 billion worth of investment, which will be completed in the next 5 years. I don't think it's going to be easy. There's a bumpy road, whatever you say, rosy pictures about that. Although already gas sales purchase agreement signed, finance is in place, all the contracts distributed, still it's not going to be easy. That's another message. For such gigantic projects, there are many factors to be borne in mind. Also, some of the joint venture partners decided to leave. Statoil sold its share to Petronas of Malaysia recently. Total also disinvested. They sold it to Potash, Turkish gas company. So, as the project goes and develops and matures, there will be changes of this type in Israeli gas as well. So bear in mind, long-term perspective. No quick fix, no quick solution. EU, well, it's like a Mecca for many gas producers, because this is the continent where, although demand is growing slowly compared to China, India, and the rest of the emerging world, this is a high-value market. They respect the contract. They pay you in time. So it's the OECD markets, more or less, which offer you all the protections, transparency, integrity, and the financing options. That's the reason why all the producers are vying with one another to sell Europe. But whether there is enough appetite and demand in Europe, that's another question. Because according to the projections IEA has drawn, by 2040, Europe will have a gap of 400 billion cubic meters of gas per year. That's huge. That will be enough for Russians, which are now providing almost 30% of EU's gas, which will be decreasing because of this reliability issue. And then, of course, Azerbaijan would like to sell more, not only the 16 BCM that they will be producing from 2018, more or less the same timing. They want to increase it to 40 BCM, which they have potential for that. If Turkmen gas, Iranian gas could be mobilized as well, then Kurdish gas, because I'm on the board of Genel, which is the largest oil and gas producer in Kurdish region of Iraq, so we'll be producing about 4 BCM in 2018, and then this will go up to 10 BCM, more or less what Israeli export gas will be. And so the pricing is very critical there, and Turkey pays the highest price to Iranian gas, followed by Russian, Azeri, and Kurdish gas, which comes at around $6 per BTU. It's quite difficult to beat that price as well. And also there is a concern that if relations with Russia get colder and heavier in terms of political, economic relations, sanctions, and Russia might be turning more and more towards China and Asia-Pacific markets, where the demand is. Personally, I don't think that this is going to happen soon, because there is no serious infrastructure in place. It will take years and billions of dollars to build this infrastructure, contrary to what they have with Europe right now. But they signed this $400 billion worth of agreement with China, you remember, a couple of months ago, I think in May, and this was for 38 billion cubic meters of gas. And but I don't think that this is going to move smoothly, because I was working in the Turkish embassy in Beijing as a diplomat back in 1989. At that time, CNPC was saying that 5 years later. So we agreed with Russia, we are going to sign an agreement. This is in 1989. We agreed 99%, there's just 1% which is missing. And since then, more than 30 years, this 1% is still a stumbling block. That's about the price. So how much you are going to pay. Yes, let me say a couple of words on Israel before David tells me that, shut up, that's enough, you already passed your time limit. Yes, Israel, I think, has created a miracle at a time when Maribi field came almost to depletion, and Tamar and Leviathan and 2 other new fields, and which will not only meet Israeli domestic needs, but create a huge export market for it. And we also heard from Noble what the real net value to Israeli state is, the revenues that it's going to generate. And so also there is a euphoria here in Israel, I understand, to gasify the economy. Turn all the power generation using coal into gas. Even for transportation, you can use gas, and of course residential and other areas, industry, petrochemicals. I think these will require also massive investments, not only getting the gas to the surface, carrying it onshore, processing the gas. We are dealing with this problem in Kurdistan right now. Building a gas processing plant will cost about $4 or $5 billion, and we have difficulty in finding the right finance for that. Then the distribution networks, and so there will be lots of work to be done. This will require lots of money. Where will this money come from? Of course, I can say a few words about this as well. And right now, I think the investment in energy sector is declining. Not only because of the lower oil prices and gas prices, but also the way financial markets are working. Many of my friends in London and New York working in investment banks, they are looking for other jobs. Either they have to relocate to Shanghai, Hong Kong, Singapore, or find another job, perhaps set up a restaurant or get into painting and interior decoration. So there isn't much money in investment banks. And so we have to look into untraditional sources of funding. And yes, of course, equity, debt, lending, but sovereign wealth funds. They have huge funds, as we know from China Investment Corporation, MSF of Singapore, and Mubadala, and all others have huge funds to tap into, but it's not easy. In the past, for political decisions, they used to channel these funds, but no longer so. They are also taking very stringent criteria for viability, commercial viability, and netbacks in the future. Pension funds. They are looking for stable, lower rate of return, but stable investment, public-private partnerships. They are very interested in renewables, power generation. Insurance companies, traders, and also Islamic finance, increasingly. There are around $7 trillion of Islamic finance through sukuk, corporate bonds, that can be tapped into. So, again, the countries and companies have to be very open-minded in terms of where money could come and how the requirements could be fulfilled. And it's not easy. I mean, it's not enough only for governments. I want that. This is my blueprint. This is my tax system. This is how you have to respect my regulations. You have to adjust them according to what your competitors are doing and also what your circumstances require. So, the key message at the end is, again, as I started in the beginning, bear in mind what's happening in the world. What are the best practices to learn from other big projects? Some of them elephant projects, white elephant projects, and some of them very dynamic and also robust projects. We have to study carefully what were the pitfalls, what were the advantages they followed, and learn from these experiences. I think there is a huge lot of work that falls on government to understand the needs of companies, financiers, and other stakeholders so that you can align them rather than sitting in your soft chair and making decisions on the basis of what you believe is right and how the future should look like. Israel, of course, will be capitalizing on its gas discoveries and gasification process within the industry in such a way that it will contribute to the enhancement of Israeli competitiveness on the world scale, and not just for the sake of undertaking this project. So very careful due diligence and feasibility studies needs to be undertaken. Then about the export outlets. I think one thing I learned during my time in BG as a senior executive is we never start from the upstream side. There's an upstream opportunity. The first thing we do, we go back to the downstream. Where it's going to be consumed, who is going to buy it, how we can build a pipeline, how much we are going to get, and how we can raise the funding. Once we sort out that, then we come back to upstream and we establish the model accordingly. So it's not that we first produce and look for export markets. And Israel is going to have a tough time in terms of finding the right markets in the existing circumstances where there's going to be an abundance of supply, especially from 2018. Whatever contracts you are going to sign, I think will be very valuable. If way too long, and it's going to be not very advantageous to the companies and governments. I know that the initial emphasis is on LNG and using BG facilities in Egypt and also other options. And I think this is the cheapest and easiest way. But there are political, of course, risks involved in it. You have to take this risk, otherwise you could never initiate the final investment decision and move ahead. So that's where it has to start. But I still believe in the medium to long term, Israel and Cyprus, in this context, will need to have pipelines. And to reach high-value markets, yes, Jordan, Palestine Authority, Egypt are fine, but you might know what happened to BG in Egypt. A force majeure because of non-payment of our receivables. So you have to look for high-value markets, those who can pay, those who can consume, and also transfer to where. And in Turkey, yes, there is, I think, a government in power right now which is not looking at Israel very positively. It's very ideologically tinted. But as I said, as in long lead time in energy decisions, 20 years, again, for such decisions, it shouldn't be pinning hopes or dislikes on only one person. The governments come and go. I think the fundamentals are there, and Turkey could be one of the attractive export outlets for Israel. But in current circumstances, it's difficult to sell it to any public or government officials because it is a relatively unfriendly environment. But keep in mind the long-term perspectives. I think the last message, again, repeating myself, the same mantra, you need to look after international oil and gas corporations, working in tandem with your local companies, creating local content and spillover benefits. If you look after them, they will look after you as well. So create a sort of win-win proposition so that both sides will feel comfortable in this long-term relationship. Like in a marriage, if you want to have your marriage to last at least 20 years, which is quite rare in today's circumstances, I think you need to look after each other very well. That's my final message. Thank you.